Okay, so here we go. So I'm Trisha with Easy E-mini Trade, and most of you know me, or you know Maria, or you wouldn't be here. You wouldn't have been invited. And I'm doing this webinar for Maria because she told me about these lines with probabilities, and I just was not buying it at all until I actually started to really pay attention to them. And so that's what we're going to go over today. And so basically, Um, she's going to be here to answer questions as well. I'll go through everything and anything that we can hopefully make clearer to you guys, um, we'll happily do. And if you have any questions, you can type them in the question box. Maria's going to answer them via the keyboard, and then toward the end, I'll give her the mic and she can answer anything that I couldn't. Okay? So let's get started, you guys. So what we're going to go over today, the probability lines, as I mentioned, and these are available on 6E, CL, GC, ES. Oh, I put gold on there twice. And NQ. What did I miss? ZB. So one of these should be ZB. So I'm just going to go right into it and share screens. So let's start. We'll start on CL. So these are the lines, and you'll see here that we've got these three lines on the upper end here. You'll see there's nothing above that. And then we've got these skinnier red lines, and then we've got these purplish bands. You can't really see this too well. This is orange. This is basically the line in the sand. Easiest explanation would be above it, buys, below it, sells. You'll see these green bands, that's support. Anywhere you see a blue line, that's like a high volume area. And if it's like this, a wide purple band like this is a high volume cluster. This is a wide support cluster. The areas down here would be support. This would be a support cluster. And then we have the three lower lines down here. So these are the final targets on the low end for shorts, technically shorts. I mean, you could trade these lines in both directions. And then you've got the three lines on the top for final targets, the upside. So I'm just going to scrunch this up just the hair so you can see over here. Can you guys see this? Okay, this is big enough, right? What I did was I increased the size so you can, I increased the font so you can see them hopefully a little bit clearer. This is for Ninja 7 at this point in time, James. And Maria, I just want to make sure you got your big question box open so you'll be able to see those questions. So these are obviously the values of the lines. And what we're looking for is we're looking for the breaks of the lines. So before she had the probabilities, we had the lines, but to me it was a little bit hard to just arbitrarily take a break of a line and expect it to hit the next area above or below. So I had an issue with that. Even if it was a mental block on my part, I just couldn't bring myself to do it. So the programmer that Maria has been using, I don't know much about him. You'll be able to ask her more questions later about that. But he was a programmer for Lloyd's of London, and he is like insanely genius. It like blows my mind. And you'll see here, if I right click on the chart, you'll see the indicator, and it's not really an indicator per se. This is what draws the lines, but the information is provided by the programmer each morning, and then it just knows to look for it in the file location. And I won't go into much of that now. That's something that Maria can talk to you about. If you have any questions about that, you can contact her. But you could change the colors, you can change the font size, and here's where you pick your date. So you're always using the day prior. So if I wanted to, I could put Fridays on here as well, and you could put many, many days on here worth and just, pick the day. So I could put the 5th and the 2nd and the 1st and the 28th, and it will not calculate forward. but you'll be able to see where those areas were in the previous days if you want them. To me, I'm not using it that way, but you can put as many days on there as you want. And then you'll notice here, I put a little check mark in here, and it will truncate the lines, so it will extend the lines out. If you did have this on multiple days, whichever one is listed as the very first here would be the ones that you could extend. So let's say that I had February 28th on here and it was listed first, and I put a check mark in here. Those are the lines that are going to extend. So it's whatever's on the top here. So if I had it on here numerous times, it would be the one on top that's going to extend out. So this is information provided with yesterday's info, but for today. What this is taking into consideration is volume areas. It's taking into consideration lots of different things. Obviously, the programmer is using a lot of information to calculate these areas, and it's based on analytic data that he has compiled over the last year. So what we're looking for is we're looking for a break of these lines, and you'll notice that we've got, I'm going to make it big so you can see here, we've got these blue figures over here, and these are the deltas from these areas when these were provided. So obviously this delta is not going to remain the same when price trades back to that area, but basically when you start out the day, this is what the delta was here and here. So you have positive, negative, and you can disable those if you like. You don't have to have them on there. It's totally a choice, but it's as simple as setting it to true or false in the indicator that I just showed you. So here's the start of the day. I have this on a 15-minute chart, and this is CL, and you can put this on any size chart you want, because really what we're looking for is we're just looking for the levels, right? And you'll notice that, I'm going to make this a little bigger so you can see it. So you notice this level here, this wasn't likely a time that anybody was trading. This is like at 10 o'clock last night. But you see you get this little green circle here, and then this is telling you a break of 62.71, which is this line right here, has a target, once that breaks, of 62.79, and it has an 83.8% probability that it's going to hit that target above you. So when you get these probabilities that pop in here, it gives you a little bit more added confidence in sitting it out, waiting for that target to get hit. Now, obviously, if this was a much lower probability of hitting that target above you, let's just say, 57%, I'm just making that number up, you're probably going to pass on it, or if it is taking forever to hit that target up there, you probably would take a lesser target. So what you'll find is that when price is breaking this line, this doesn't pop in ahead of time, that little green circle. Hopefully you can see that there. What it will do is once price breaks it, it'll, not always, but if it's an area that has a high probability, it will pop in this little indication here, break at 62.71, target is 62.79 with the 83.8 probability. But price has already traded through it, so it's not a big deal. You just put an order in that general area waiting for price to retrace to it and wait for it to trigger if it's a probability or if it's a time of day that you're trading. This isn't a time of day that I'm trading at 10 o'clock at night, but hey, Michael. But what I would be looking for is when I'm trading, I will generally start trading pre-market around 6:30. Just depends on what I have to get done in the morning. But I can trade this around that time. So if I'm sitting here at my desk at 8 o'clock or 6 o'clock when it breaks again, I can try that, right? I know it's already hit the target here, but I can still try this in that same area, and I can keep trading that same area. Now, if you're using order flow, you can back it up with order flow, using that to confirm buyers stepping in if you're worried about it, or you can use a delta if you don't want to use a full order flow. So if I put a buy here realistically, I wasn't trading at 4 o'clock in the morning, but you could have taken it here. You could have taken it here. You could take it anywhere, anytime it broke here. Obviously, if you're familiar with CL, after 6 a.m., it generally will start to move a little bit more than, let's say, 4 or 5 in the morning. Very often you get a movement around the open of the European market. So whatever your time is to trade, that's where you're going to be looking at it. So we get this area, like I said, you could have taken it many times here, and it hit the target here, but then again, it hits here, right? So it hits this target here, and that's that 62.79. Then you get another indication to take the break of the 62.79 with a target of 62.99. Now, the probability of it hitting that is 60%. Now, not so much because of where it's at, but because of how much ground it has to cover. Now, if you look over here in this upper left-hand side, you'll see that we've got ticks in time. So right here where it says X, that's the average number of ticks. So that's the mean, 11 ticks. M is the maximum number of ticks. This little m is the minimum number of ticks. So what this is telling you is that the average number of ticks that you can generally get, again, based on the analytic information that is already calculated into all this, is 11 ticks. Excuse me. If you were going to wait for the maximum of 36, obviously you're going to be waiting obviously a lot longer sitting in the trade. And you'll see here you have the same information for time. You have the average of 144 minutes here. You have the maximum of 151 minutes, and then the minimum that's set to 0. Excuse me. So basically what this is telling you, if you're going to try to hit the maximum number of ticks of 36, let's say, it's going to take you 1,051 minutes. Now, nobody's going to sit in that trade for 1,051 minutes. So basically you're looking at the average here. And even 144 minutes, that's a long time. But, generally if you stick within like the 50% area right here, that 50% of the time you'll get 9 ticks in 46 minutes. And that's just based on today with this particular setup. Does that make sense, you guys? So if you're sitting here, let's say that you take this entry. Let's say you take the break of this 62.79 and you're worried because it's only 60% probability that it's going to tag this area up here. So if you're sitting in this trade and you don't have to like wait for it to hit that actual 62.79. Like what you could do is once it breaks and you get the signal, you could place your order right on this area or just under it, or just above, like if you have an area that keeps holding just under that line of 62.79, you just want to get in somewhere in that vicinity. So let's say that you take that trade and you're sitting there waiting for 62.99 and you've been sitting there, let's say that you only have, let's just say 6 ticks. I'm just making this up. So let's say you only get 6 ticks and you're sitting there for longer than 46 minutes and you only have 6 ticks. Realistically, take the 6 ticks and be happy about it, because basically once you get beyond that 46 minutes, the chances are that you're not going to hit the larger target. But obviously this has no issue whatsoever. So bust through, here's your next target up here. It tells us right here 62.99. So here's your target. Now you get another signal. Once it tries to break right here again, you get another signal to enter long. Green circles are for buys and the red circles will be for sells, and I'll show you that in a second. So you enter in here at 62.99, expecting the target of 63.19 up here to hit with a 67.4% probability that it's going to hit there. right? So we know going from, let's just use 63, a nice round number. So that's 19 ticks, basically, to hit the target. If you want to be exact, 20 ticks up here. But we already know 20 ticks to get up there. We already know that, and this is going to change very often. It'll change based on the setup that it's giving you here. But for the sake of argument, let's just use what's here. So if you have 20 ticks up to this area, and you look here and you already know the average is 11 in 46 minutes, and if you're in this again and it's past 46 minutes and you're still waiting for 19 ticks, you can just trail your stop a little bit tighter or take what you can get. Realistically, most of us, as the type of traders that we are, aren't going to sit in something longer than an hour, likely, because the longer you sit in a trade, obviously, the more likely that you're going to get stopped out, right? So here's a good example right here. So we do get another signal right here at 63.19 with a target of 63.39, and this was pretty late. If you're trading pre-market, you wouldn't have messed with it, but obviously a lot of people trade CL during regular trading hours. So if you take the break here, 63.19, target 63.39, you have a 67.4% probability that it's going to hit that target above us, which is here. So you buy it and you're sitting in the trade, and just like before, average is 11, 50% of the time would be take 46 minutes. You could see here 95% of the time to get 26 ticks, it's like 509 minutes. So you're not going to sit in the trade for that long. Not to say that it couldn't pop up there and hit it, but if you have a lower probability of hitting the next target, you're going to pay attention to the time analysis that the programmer is providing for us. So you're not sitting there waiting for it to hit, and now you're sitting there for 2 hours and it hasn't hit, because you know, majority of the time you should have already been well out of the trade. And you're going to want to realistically place your stop in a high volume area. So if you're using a smaller chart to manage your trade once you're in it, you can put volume at price and put the stop behind higher volume area, or you can use an area of support or resistance, generally, however you decide to manage it. But I will tell you this, if you know something has a high percentage probability of hitting the target above you or below you, you're not likely going to be too worried at using a larger stop, in my opinion. So here you can see that we get on the other side of this orange line here, which, like I said, is the line in the sand. And so now this is going to start giving signals for shorts. So right here we get a break of this support cluster here, and it tells us the break of 62.23 with a target of 61.68 has a 76.7% chance of hitting the target of 61.68. Now we already know, this is at lunchtime. This is after 11:30. So we know generally that CL doesn't move as nicely at that time of day. So again, you're going to want to refer back to your time and tick averages here and know, okay, this is a really large target, and based on the information that I have set here to my left, I'm going to be looking at, realistically closer to, around 11. And then once it's beyond 11, then I can possibly start trailing, because again, you're not going to sit in this all day waiting for that target down here to get hit, right? So I'm sure that you would agree with that. But let's just see what this actually got to here. It got to 17. Wait, let me see what it actually got to. 62.17. So realistically, that would have only provided 6 ticks of profit. even though it gave a 76.7% chance. But again, the time of day, you're still going to want to use a little bit of common sense. If you're trading it, something that doesn't typically move in the afternoon at all, you're not going to sit there all day waiting for the target to get hit. So let's see, what should we look at next? So let's do the same thing. Let's look at gold. I'm going to tell you, Ken, I just saw your question, and probably Maria just answered it. But there are a lot of people trading these lines in both directions. So even though, we're getting signals for buys here, a lot of people will trade them in the opposite direction also. And so that's going to be something that, each individual would have to decide if that's right for them. But if, based on the type of trader that you are, like if you have, let's say that, you're up at an area of resistance on one of these lines, and it breaks and you hit your target and it's holding, and you're looking at something on one of your entry charts, let's say that you're trading off a tick chart or a range chart or something, and you've got reason to believe that this 3430 area is going to hold as resistance, and you think that you have a good chance of shorting there. You can short it with the expectation of it trading back to the line below you. So you can trade them in both directions, but for the information that we have at hand, we are getting buy signals, these green, above the line in the sand, and sometimes you'll still get a buy. It just really depends on the big picture based on the analytics that the programmer has provided. So like even here, you got a buy in this area here, even though it's a line in the sand, but it's based on his cumulative data that he has accumulated over the last 12 months, and analyzed it and calculated all these probabilities and the lines. So I'm not saying that you can never get a buy to set up below the line in the sand. This is, just a simple, easy visual, if you will. So in looking here, I don't even know what time this was. So this was, and this is gold, you guys. So we have the same information now. This, excuse me, this last breakout here was at 10:05, which is right here. So this is going to update based on the type of trade it is. So we have breakouts. This is a breakaway trade. He has resistance cluster to resistance cluster, support cluster to support cluster, resistance cluster to support cluster. So he has lots of different categories, and this is going to give you the information based on the last breakout. So this would be the last breakout here. So based on this breakout here, you'll see we have no more targets above us. Remember I said we have those top 3 lines. We don't go any further than that. And then we've got the lower 3 green lines, and we don't go any, like there's nothing under that, and then there's nothing above here. So you'd have to use your own information that you have for other resistance areas once you get above that. So if you're looking at your own 15-minute chart or a 60-minute chart, and let's say that you just had a previous area of resistance up in this area based on what you're looking at on your own chart, then you could use that as a target. Otherwise, you could trail, or you could put a previous day's, like we talked about, lines on as well and see if they fall in that area, and you can use those as your targets. So in starting back here where we got the first break here, now this is not likely a time that many people are going to trade gold. This is yesterday at like 9, 8, 7, like 7 o'clock, 7 p.m. So you do get a signal there for a buy at 21.90 with a target of 23.30. 72.4% of the time it's going to hit that target. So you can see it hit the target. So you buy here and it hits the target. But again, not realistic that most of us are trading gold at that time. Here, I think this is probably around midnight or thereabouts. Again, you get a buy setting up here on gold, and it's got 1323.80 with a target of 1327.50 and probability of hitting the area of 27.50 up here is 77.7. Now you can see it didn't hit that when it broke here, but again, it's midnight volumes light. So after you're in this trade, I mean, how long would you have been in this trade realistically? Let's see how long that was. An hour and 30 minutes. Not likely you're going to sit there with your stop in place for an hour and 30 minutes still waiting for that target. So why not take what you can get, right? And then if it trades there again, you could take the entry again. So if you took the entry here, because you could take it again, right? We are breaking that same cluster here. So you put your buy at the 23.80 area, and you're still hoping for this target here to hit because it still could hit that area that hasn't hit yet, 27.50. And what you could do is you could look at the area here where it was holding as resistance, and wait till price gets through it. And if you want to adjust your stop at that point, it's still like 13 ticks, 12 or 13 ticks. So, and then once through that, you're looking up here, right? So once it hits there, it's hit your target of 27.50. The thing about it is that you don't know that it's going to hit the target within seconds, minutes, but at some point during the day, it will likely hit that target. That's where the information giving us the time averages is really helpful. Now, they're not showing up here now because, like I said, the last setup was a breakout here and there's no targets left. So that's why it's not really giving anything up here, that information up there. So here you get a break, 28.90, target 13.30.70, 78.7% chance that it's going to hit the target up there. So you put your buy here. And again, this shows up after price has broken. So once it breaks, then you just put a buy limit order down here and wait for it to trigger somewhere in the vicinity here. Target hits, you'll see you get another signal in that exact area. So you don't have to get out here at the 13.70 because now you're getting another entry signal there. So you could take it, add to your position if you want, or you could just trail your stop knowing that, okay, hey, we're just breaking this 13.30.70 area with a target of 32.50, and 72.8% of the time, 72.8% chance of probability that it's going to hit that next target above. What do you know? It hits the target above. So once again, if you're already out, you can enter again when you get this signal here, 32.50, target of 34.30, 72.8% probability that it's going to hit that next target above. So here it breaks, right? Doesn't quite hit the target, but 72.8% of the time it's going to. So if you take the trade and it's, you're sitting in it for, let's say longer than 45 minutes or an hour, no reason why you just can't take your profit before it hits up there rather than wait for, see if it retraces. Because if you're sitting in it forever, the more likely it is that it's going to pull back before it breaks out, right? As with anything that you're trading using any kind of setup or analysis, the longer you sit in a trade, the more risk you're at, right? Where that's the whole point in the programmer's information on the time stuff. So here it does eventually hit the target. So let's say you're already out because, this would have taken, let's say, this is a 15-minute chart. So let's say 1, 2, 3, 4, 5, what's that, an hour and 15 minutes. So you're not likely still sitting in this trade an hour and 15 minutes, still waiting for a couple more ticks to hit your target. But then once it breaks, guess what? Now you got another signal. So you put your order in the same area here, 34.30. Now we don't have a target because we've run out of all of our lines. And so once we have no more lines left above us, it's not going to give us a probability. So that's where doing your own analysis of previous areas of support and resistance in this area is going to be helpful. So you can use that as your target. So what do we got left here? Let's look at, so that was gold. Let's look at 6E. Yeah, absolutely, Jimmy. You can, I'm going to tell you a story, and I would never do this, you guys. You guys who know me know that I'm a very cautious trader generally. And on Friday, okay, I'm not ever going to recommend you doing this, but I'm going to tell you what happened to me on Friday. So I have my probability lines, and I'm in an NQ trade, and it was probably around 9:35 was the time or something. And I get in the trade, and I had a probability of like, it was high. It was like 84.7% chance that it was going to hit the target below me. It was for a short. And I set a huge stop because of how NQ has been whipping around. I didn't want to get whipped out before I had my 84 point some percent chance of hitting my target below me. So I felt confident in the big stop simply because I had a big target below me and the probability was pretty high. I lost internet, and normally I would be calling, this was in my Ninja account, so normally I'd call Ninja and say, get me out of the trade, get me out of the trade. But I didn't panic. I didn't even call Ninja. I called my internet provider. I'm like, hey, I don't have internet, blah, blah, blah. So I'm still sitting in this trade, just hoping that it's going to work out because of the probability. And so good, I don't know, 20, 25 minutes later, I finally get my internet back after Frontier figuring out what the heck was wrong. And I'm still in the trade when I get back on, and hasn't hit my target yet, but almost within like 2 minutes of me getting the internet back, it actually hits my target. And I got a really nice profit on that trade because I was able to sit comfortably because I knew the probability was high that it was going to hit the target. Now, obviously, I don't ever recommend not calling the broker when you lose your internet, but I thought, okay, well, let's put this to the test. I got 84 point something percent chance it's going to hit my target, so there's no reason I have to be sitting here watching it, right? So it worked out, and I have to say I was a nervous wreck after the fact because it goes against everything that that I normally would do in the way of, oh God, lost the internet, let me out. But like I said, I had the confidence to sit there. Now, the other thing that this does, which I've been having a really hard time with lately because of the whippiness of the indices that we're trading during regular trading hours. And it seems like I'm getting stopped out just to watch price go on and go in my direction because of how whippy it is. So this has helped me sit longer in the trade with a bigger stop, knowing that the probability, if it's high enough, it's going to hit that target, and I just have to have some patience. So when it's whipping back and forth, admittedly, without this information, it's like you almost get shell-shocked. At least I was getting really shell-shocked because it's like, okay, if you're not using a monster stop and it goes a little bit in your direction and you're waiting for your order to get hit for your target, and then it whips right back against you, and if you're using a tight stop, you're going to wind up getting whipped out of it. So, we've been trading off larger charts and so forth, but, we're all a little shell-shocked, I have to admit. So this has helped. This has helped me a lot in just that regard. All right, so back to 6E. So this is your future if you're not familiar. And you can see that we have, which one came first? It looks like this one came first right here. So you get a break at 23,510 with a target of 23,600, and you have 84.5% probability that it's going to hit that target above you. So obviously, if you're trading at that time on 6E, then great. I'm not, so nothing I can do about that. Here, same thing. You get a buy here at 23,600 with a target of 23,710 with a 74.5% chance probability that it's going to hit that target above you. Now, this is before the European Open, so, it's questionable when it's going to get there. Generally on the European Open, you do expect some kind of movement, but this didn't move a whole heck of a lot, like typically what you see. So if you were sitting here waiting for this target up here to get hit, obviously it didn't get hit, but you were sitting here probably where you entered back here was, that was forever. Let's see how many bars. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So 14 bars on 15 minutes. You're not waiting for that, right? From back here. But here, when it breaks it again, you could decide to take it, even though it didn't hit the target here on the break here, up there, you could still take it. And just like with any good analysis that you're doing in a trade that you're in, if it's stuck at a resistance area, so you can see we've got these swings here. So if it's struggling there, then, just get out. You can always re-enter it when it breaks again. So here you get that same area. So now you have to decide, you're going to try it again. Still, yeah, why not? You got more volume. This is at a better time. This is just after 6 o'clock. So you could take it down here again at 23.6. Target's still up here at 23,710, and it hasn't hit the target since the break here. So still chances are good it's going to hit, right? So obviously it hits. Then you get another signal here for that same area. And this is on a 15. You could put it on a 30-minute, a 5-minute. It's not going to really matter what time chart you put it on, because you're just really watching the levels of the lines. So 710 is the entry. 820 is the target. 77.6% chance it's going to hit the target. And at 6:15, this was like it popped pretty quickly. So, you may not have gotten a chance to take this. I don't remember if it retraced or not. So if not, then you wait for the next opportunity, which is above you, or you wait for the retracement and just leave your order sit here and let it trigger. So it gets up to the target as dictated here, 820. Now you get a buy signal up there once it breaks. So then you put your buy in this area, limit order, just leave it sit there. 820, target of 930, 77.6% probability it's going to hit the target above you. What do you know? Hits the target above you. And so again, you're getting your break. Now this isn't going to give us a probability because this is the last of our target lines. So once again, you would look at your information that you have, like on a 60-minute or a 30-minute or a daily, whatever chart you like to look at, and see where the next area of resistance is going to be based on your own price analysis. So you take the buy here at 930, and then you have to figure out, what you're going to use as your target. Now this isn't going to give you an average, but like when these broke here and here, right over here would have given you tick average and time average. So that's what you would be watching for. So if, let's say that this broke and the average was, 10 ticks in, and I'm just making this up, let's just say 10 ticks in 20 minutes, and you're sitting here and you've already gotten, let's just say, you've hit your target up here. It's a huge target, and you're still sitting there. You've already hit your target. So you're not really looking for much more than that from this entry here. And then when you get the signal here to take it, then obviously you add to it or you re-enter. And so there is no next set of targets above that absolute last line here. So you won't have any probabilities estimating where it's going to hit, but you'll have an idea of what the average tick range is. I mean, you can use this average here, right, from this line to this line, and use that as a target area if you wanted to do that. Figure these are all pretty evenly spaced. So what would that be realistically? Quite a ways. So I mean, you got like 20 ticks there. So, and if you had that showing over here as the average of 15, let's say, you already exceeded it, right? So you could use that as a possible target area above you. Or, like I said earlier, you could put this on here for the last couple days and look back and see where some of the old lines were and use that as a target. So what else can we look at here? So that was 6E. So we looked at 6E, CL, GC. Let's look at ES. Here's ES. ES, actually this morning we traded pre-market. I opened my room early, and I have to admit that I'm still not 100% confident yet in just buying them. But we had a break here at 27.75, and this happened to be yesterday's high area as well. So we got this signal here to buy at 27.75 with a 72.7% chance of it hitting the target above. Came within a couple ticks of hitting it, but I want to just make it so you can see this info over here. So you buy here at 27.75, doesn't quite hit the target of 35, but it retraces and holds again. So you could buy it here again, and here again, and here again. Now, remember I said you can confirm with, this is at 10 o'clock, but you can confirm with order flow or the delta. So if you have the delta on a smaller chart that you're using, or even if you want to put it on this chart, if you see sellers coming in, you're not going to try to buy this likely, right? So ideally you want to see some buyers coming in, and because we've already come close to that target, but you could keep buying it, but knowing where it's been struggling has been right up here in this area here. So you could use that as your gauge with every time you try to buy off that area. And like I said, this was into news at 10, so not likely that you would just arbitrarily put an order here with news coming out at 10 right as it's breaking. But if you look over here, you can see in ticks, we have the average of 7, right? So that's the average, 7 ticks. The maximum ticks is 24. The minimum is 2, right? So if we look at the 50%, that's going to give us, basically a halfway gauge of telling us that, 50% of the time you're going to get 5 ticks. And if you look at 50 here, in 54 minutes. So 5 ticks in 54 minutes. So again, looking here at the minimum of 2, that's only going to, it's going to hit in no time for 2 ticks, obviously, but you want to stay in as long as you possibly can. But let's say that you're in here for longer than 54 minutes, right? Waiting for this target up here to get hit. You've already gotten your 7 ticks. That's the median, right? So you already got your 7 ticks. So anything that you get above that 7 ticks in less than 54 minutes, that's great. Now, if you're going to sit in it longer than 54 minutes, then, wonderful. You already know if you already got your 7, then you've got more than the average, right? And so if you're sitting there thinking that you're going to get 24 because of the maximum, okay, you look here, the maximum time is 3,102 minutes. That's ridiculous. Nobody's going to sit there for that long, right? So you're not going to just sit there and say, okay, I've been in this trade for 3 hours and it hasn't hit the target yet. That just doesn't make sense. So that's really the only one that popped up on ES today was that one here, but that area was I mean, alone pre-market, you know, we could have taken it 3 or 4 times, and I missed it twice, which was my fault. But, and then as it's trading here, again, you could still take it once it trades back up after the news. This is this afternoon. So you already know at 2 o'clock in the afternoon, on most of these indices, we're not going to get a whole lot of movement, right? All right, so what's left? I think NQ and ZB. All right, so here's NQ. Yes, these will update during the day. So like you may start out and there's nothing going on, like you don't have any signals, and then these pop up. So as price breaks here, this will pop up here. So this is constantly updating. And just because you have a line there doesn't necessarily mean that you're going to get a signal. It doesn't mean that you still couldn't take it on the break of some of these lines, but you do not get a signal with the break of every single line. Okay, everything has to be in line for you to get the signal here. So here, this is NQ, this is 2 o'clock in the morning. Again, not likely somebody's trading NQ at 2 o'clock in the morning because the volume is minuscule. So you get an entry at 450, target of 25.25 with a 70.7% chance of it hitting this target. So, you know, what's that? Like 19 points away. So you'll see here the median is 18. It's ticks, not points, right? So 19 points is pretty much well beyond the average here. So average is 18 ticks, right? Maximum is 24, minimum is 14. And if you look at your time here, you can see 50%, because you want 50% or less. So 50% of the time, it's going to take, this is based on today, what we have here in front of us, 33 minutes to hit 18 ticks. So if you take this buy here, you can see how many, and this is 2 o'clock in the morning. So if you're sitting here waiting for this monster target to get hit of 19 points, and you're in this trade longer than 33 minutes, then realistically, you know, you're going to want to get out with what you can or tighten your stop. This also was a buy here at 6,900 to 450. Now this one was an easy one because, again, if you're trading at that time, you have 91.1% chance that it's going to hit that target. That's a pretty close target in comparison to this one up here. Obviously, it eventually hits this target. Again, that was right around the same time everything else moved, around 6 o'clock this morning. Then you get a signal here. And this was at 9:57 this morning into news, so whatever you do into news. So you get a break at 25.25, target of 46. Again, this is well beyond the average of 18 ticks. So once again, once you're sitting in this trade and you're beyond 18 ticks and you're sitting in it longer than 33 minutes, you know, you're not going to just, like I said, sit there and wait until that target gets hit, even though it has a probability of hitting it 82.4% of the time, right? And this was definitely, we had some news issues going on today, which brought this down as well. So is that making sense, you guys? And what's left now? I think ZB is it, and then I've got them all done. Maria, do you see that question about putting it on Renko or range chart? No, you could sit longer than 33 minutes, Roy. That's just the average. So the average is if you sit in the, let me bring the NQ back up. Like if you're sitting in the trade longer than the average time, 33 minutes, and you already got your 18 ticks, let's say, and it's not going, it's like, okay, you're already at the average, be happy with the 18 ticks. And then obviously if it pops and you're still in or you're trailing, then, you know, ideally you want that target to hit above you. But if you're in this trade for longer than 33 minutes and you've already got the average and it's not going anywhere, then take the average, because you have the maximum here of 24 ticks. But looking at the time information here, you have 1,050 minutes as the maximum. Are you going to sit in this for 1,050 minutes to hit that 24 tick mark? Probably not. But yesterday, like NQ, and I could put yesterday on here. Let me do it real quick. Oops, where did it go? And I'll make this big here again. And I'm going to put that one there, and I will use, there we go, Friday. All right, so let me go back here. Why didn't that extend out? Let's see, maybe I put it in the wrong order. Let's see, this one here is the second. Okay. I'm going to put this on a 30-minute so we can see all the info here. All right. All right, so here is yesterday. So yesterday, and it's not going to give me the signals right now, I don't think. But you'll see that it hit all of these targets yesterday and then ran out of targets again. So you do have days where it runs through everything. And so that's where, you know, that time information and so forth will come in handy, because if it's not moving and you're in the trade and you already have the average number of ticks within the average number of minutes, then anything more that you get is, you know, all gravy. Does that make sense? I'm gonna get rid of this because I can't stand that. That's set to true, okay. All right, so what was I gonna look at? ZB. All right, so ZB, I don't know if anybody trades ZB. That's a high dollar instrument, but it moves pretty nicely as well. So again, this is early morning. It's like, what is that, like 3:30 this morning? So you get a break of 43.9, target of 43.20, and 84.7% chance of it hitting that target up there. However, when you look over here, you'll see the average number of ticks is 5, maximum is 17, and minimum is 2. You look at the time, it's 242 minutes average to get the 5, 3,488 maximum, and then 0 is the minimum. So if you're looking at the 50% here, you're looking at 63 minutes, right, to get 4 ticks. So that's realistic. So as you get the break above here at 9, realistically, if you're sitting in that trade longer than an hour and you've already gotten your, you know, 4 ticks or 3 ticks somewhere around that 50% here, then just take it. And then if it sets up again here, obviously we're going to have more volume at 9 o'clock in the morning than, 2 o'clock in the morning in most cases on, or that's like 3 o'clock in the morning in most cases on the, on ZB. Here you get 305, 143.05, target at 143.09, 68.3% probability of it hitting that target. Now, this is doable because this is only 4 ticks away, and we know that 4 ticks is hit 50% of the time within 60 minutes, right? Hope you're getting that. And then here, when it breaks again, you can take it. And again, you're going to back this up if you've got order flow or the delta. So here, when it breaks again, you can buy it. I actually took this short here this morning on this. You can see we get a short here at 42.29, target of 24, 67% chance. And I took it because this is a high volume area here in blue, and then you have a big cluster of support. So realistically, if I was going to take this entry, this is a really good area where it's likely going to trade back to. We already know it's 67% probability of getting there, and it's within that average, right? 4 ticks in 63 minutes. Because I'm looking here at 50% and 50%. You can see the average is actually 5. Let me get that 5. But in 242 minutes, I'm not sitting in a trade for 242 minutes to wait for 5 ticks. But I'll sit for, I didn't take that long. It didn't take an hour. But I'll sit in that trade 60 minutes to get 4 ticks, right? Each tick on this is 31.25, so that's worth it. And then up here, same thing. Get a break of 20, 43.20. Target is 25. Now this is one that you might pass on. It only has 58.2% probability of hitting that target above. It does hit, and that's 5 ticks away, so it's still within the median. Even if you used, I'm trying to get it so you can see. Let me get an opening here, and there we go. So even if I only shot for, the 4 ticks again within 60 minutes, that's still, a decent probability area, but that 58.2 is questionable. But you know that even if you shot for 2 ticks, that you're going to get that actually 95% of the time. You got 5% here. Take that away from 100, that's 95%. So 95% of the time, you're going to get 2 ticks. So that's pretty doable. All right, so I'm going to unmute Maria, and she can tell you more information about anything that she wants to tell you about. And like I said, I'm still getting to trust them, and I'm getting to trust them more and more every day. So I'm really looking forward to see, where this takes me now for sure. Hopefully it will allow me to have a lot more patience to sit. All right, Maria, I've unmuted you.
Hi, everybody. Thanks for attending this afternoon. If you have any questions, you can drop me an email.
Yeah, Jimmy, it is Ninja only, but you could do like I do. I run Ninja and Sierra at the same time. I have to
run outside.
Excuse me?
I have to go do something.
Excuse me, this is your priority, woman.
Sorry, I have a little crisis. I'll be right back.
Oh, Lord. The drama. Yeah, so basically you're looking for 50 in the 50% or better area. So as long as it's like, you're not going to look like this says 95, that's actually 100%, take away the 95, 5% of the time you're going to get 10 ticks, within 817 minutes. No, thank you. I'm not going to sit there for 817 minutes. It's not, nothing's really mechanical, Ruben. I mean, unless you're going to program it to be an automated trade system. I mean, us as traders, we can't be lazy, you guys. And here recently, and I'm not accusing you of being lazy, Ruben. It just occurred to me something that somebody else was saying. You know, they want guarantees that something's going to work all the time, and it's just not going to happen. So we're just trying, you know, trading is a numbers game. You're looking for areas where price is likely to react and trade back to. And this just makes it a lot easier to expect it. You know what I mean? But nothing is going to be 100%. That's why you're going to back it up. Like if you are using your order flow or Delta and you're looking to take a buy in an area, but you don't see the buyers step up yet, then you wait till you see the buyers step up. No, Ruben, you see what I mean? No, and I wasn't signaling you out, Ruben, I promise. But it occurred to me because I got a phone call from somebody that, you know, just was looking for a whole lot more than what, you know, trading just unfortunately is not 100% guarantee. I really don't know if you could back test it. Yeah, I figure, you know, he's done the work for us. He already knows based on all the information, you know, what the probability is. So like if you have a setup that you like to trade, let's say, and it's setting up in an area where you have a line, then, you know, you can definitely implement what you're currently doing into the probability lines for sure. Because it's all a numbers game, you know? If you take 3 trades, let's say, on whatever setup you're trading, or let's just use a round number 10. Let's just say you take 10 trades and your win ratio is 70%. You already know on average out of 10 trades, you're going to have 3 losers. It's a numbers game. But if you don't ever trade enough to get past that, then, and you only take 3 trades, let's say, you never get the chance to get your win ratio up because you get scared. You know, somebody might get scared and not be willing to pull the trigger again. So you have to keep taking the trades because it's all a numbers game.
Sorry about that.
That's okay.
God.
Let's see, Jimmy, I'm just seeing your question there. I'm sorry, I'm just seeing it. What instrument were you asking? I'm sorry, I'm just seeing that. You said, what would you have done on that second break that reversed you? And I probably flipped the chart already. On the NQ today, let's see. I don't know why I lost my line, my entries on this. This was on news though, Jimmy. Is this one here? Let me put this back on a 15-minute. Make sure I got the right date on here and I didn't move the wrong one. I did. Let me put the right one on here. There we go. This one here, Jimmy? Well, this was at 10 into news, so you know I'm not going to do anything then. But, you know, once again, though, that target is huge, right? What's that, 21 points? 80 ticks when we already know that the averages over here well exceed that. I mean, you definitely got your average more than 18 on that. The 70.71. Oh, here? See, this is pre-market, though, Jimmy, with no volume. At this point, I think we only had like 20-some thousand traded, if that, on the NQ, so I wouldn't be willing to do anything here for me. And this it did work out here eventually, but for me, I won't trade NQ on light volume. That's just me. But if you were going to take that, even on any of these,
I took that for 16 points.
there you go. But if you took it back here where you got the signal, did you take it back here at 2 o'clock in the morning, Maria, or when it broke?
Yeah,
here?
I was up.
Okay.
No, I wasn't up at 2. I took it later on.
At what time?
I think 4 something, 5. Yeah, 6 o'clock. I think I took it.
Yeah, so 6, everything popped on some kind of news.
6 a.m.
But even if you took any of these here, again, if you're sitting in it waiting for that target to get hit and you've exceeded that 50% median time of 33 minutes, you're not likely going to sit there for, that many hours waiting for this to pop up to that target. Jimmy. Charles is saying the ticks and time code upper left a little unclear. This takes some getting used to here, Charles, and there's more explanation with videos and stuff that the programmer did. But basically the ticks he's giving you, the X is the average. So the average number of ticks based on the information that he's giving us today, based on looking back at the last 12 plus months of information that he has compiled and put in his algorithm, is 18 is the average, the maximum number of ticks is 24, and the minimum is 14. So the minimum amount you could expect is 14 ticks, let's say. Maximum is 24, and the average is 18. When you look at the time and you see the average number of minutes that it took to hit 18 ticks is 120 minutes, that's 2 hours. Are you going to sit for 2 hours waiting for 18 ticks? Not likely. The maximum, looking for 24, you have 1,050 minutes. Are you going to wait 1,050 minutes for 24 ticks? Hell no. Minimum here, 14, and the minimum here is 0. So realistically, you could hit that 14 pretty easily. Now, if you look here at the 50% and 50%, right? So anything better than 50% is likely what you're going to look for. So if you're looking at 50%, so here you have 17 ticks is likely going to be hit within 33 minutes. 17 ticks, 33 minutes. 17 ticks, 33 minutes. If you're sitting here waiting for 22, this 95 does not tell you 95% of the time it's going to get there. What this is telling you is that 5% of the time it will hit 22 ticks, but it's going to take you 583 minutes based on these numbers here. And these change throughout the day dependent on what the setup type is here. So these are all relative to the setup type that the programmer has provided for the information. No, it's not Murray Math. It's much more involved than Murray Math. If you took it at 2, it had a large drop. 2 a.m. Yeah, it will. These will update throughout the day. So just because it breaks again doesn't mean that, or just because it breaks a line doesn't mean that you're going to get a trigger signal. So like here, when it breaks here, you could keep taking that, again, provided that you've got, again, confirmation with Delta if you want, or order flow. And again, that's 2 o'clock in the afternoon. So, I don't know that somebody's going to want to take that same area at 2 o'clock in the afternoon, hoping for it to still hit, 20 plus points. The delta numbers are over. You'd have to put an indicator on your chart for the delta, because you're not going to use the delta numbers that he provides first thing in the morning, because it's not relevant when we're trading. These are just here from when he his program calculated the lines. So you would put a delta indicator on whatever chart that you like to use. I have it on a tick chart. And it's the delta, if you're not familiar, is the difference between the orders coming in at the bid and the ask. So if you have a negative delta and it's getting bigger, that's telling you have more sellers coming in. So let's say that you get a negative delta. Let's say you're going to take this at 2 o'clock in the afternoon or whatever time that was, 1 something, as a buy, and all you see is a large negative delta getting bigger, then you're probably not going to try this as a buy until you see it go positive as the delta and getting bigger, right? You want to see buyers stepping up. If you see sellers stepping up at the area where you're looking for a breakout, you're likely going to pass on it until you see the buyers. Let me show you what let's see, let's find one here that gave a signal. Let's do CL. So like here, every time it broke, like these weren't here. When we started out this morning and I put the lines on my charts, these were not here. This signal wasn't here, this signal wasn't here, this signal wasn't here. As price broke through this area of 62.79, the signal popped in. And so you can't tell on a 15-minute chart if it retraced. Let me put it on a 5-minute so you can get a better view. All right, so here is the 5-minute or 2-minute, whatever you want, really. So here you get the break. And so if you have an order sitting here, again, we don't know how this actually formed. If it popped straight up and never retraced, then you probably didn't get an entry here. Here, you probably got an entry because it likely retraced. Here, it retraced. So again, if it doesn't retrace to trigger your order, then you can look in that area the next time price gets there. All right, Maria, anybody else have any questions? And we did record this, so, I'll send it out and you guys can watch it again. And I know that this is above most of our head and it goes against most of our natural trading instincts until you get used to it. And I'm not quite there yet, to be honest. Very good.
You're welcome, Ruben.
And Ruben, I wasn't pointing you out earlier, right? I'm a fan. I'm your biggest fan, Ruben. All right, I'm going to stop the recording and then we can take more questions.